Hello and welcome back to Global Value. In today's video, we are going to be performing a fundamental stock analysis of International Seaways Inc., ticker symbol INSW. Their stock price is up more than 94% year to date. Currently, they're trading at $28.48 per share. They started the year trading at under $15, so over this time frame, their stock price has nearly doubled in the past 8 months. Going back a year, their stock price is up 70%. Going back 3 years, their stock price is also up 70%, which means they've compounded at a rate of about 20% a year. At 5 years, they've only compounded at 5%. And since they went public almost 6 years ago, they've actually compounded at a rate of about 15% a year. So not too shabby. International Seaways is trading very close to their 52-week high, which is up more than double from their 52-week low. About 3.5% of the shares outstanding are sold short, and they have a $1.4 billion market cap. So for some background about the business, International Seaways owns and operates a fleet of ocean-going vessels engaged primarily in the transportation of crude oil and petroleum products. The company's vessel operations are organized into 2 segments, crude tankers and product carriers. As of March of 2020, the company owned and operated a fleet of 42 vessels, including 13 very large crude carriers, 2 Suezmaxes, 5 Aframaxes, 13 Panamaxes, and 7 medium-range tankers, as well as it had ownership stakes in 2 floating storage and offloading services vessels. So International Seaways Inc. serves independent and state-owned oil companies, oil traders, refinery operators, and international government entities. The company was formerly known as OSG International Inc. and changed its name to International Seaways in October of 2016. The company was incorporated in 1999 and is headquartered in the Big Apple, New York, New York. So for our fundamental analysis today, we're going to be performing a modified version of the 8-pillar analysis popularized by Everything Money, taking a look at 8 key financial metrics of International Seaways business to come to a holistic and beginning understanding of the business based on those fundamentals. So let's get right into it. Starting things off with pillar number 1, we want their average PE over the last 5 years to be below 22.5. So currently, International Seaways has a negative PE. They're not producing positive earnings. Over this time frame, they actually only produced positive earnings for a short time frame during 2020. So overall, they're averaging negative earnings. This is going to be a pretty bad X to start off here on pillar number 1. Pillar number 2, we're looking for an average 5-year return on capital that's above 9%. So over the long run, over the course of decades, a stock is going to return approximately what its underlying business returns, and those underlying business returns are going to be captured here by return on capital. So in their return on capital metrics, we get a glimpse at the cyclicality of the overall shipping market, especially the crude oil shipping market. So their return on capital has fluctuated quite a bit here. They only produced average returns on capital of 9% in 2020. And the rest of these years were pretty lackluster. 3 of them were negative. So in an average year, International Seaways is only producing a 1% return on capital, which is actually below the rate of average inflation over this time frame. So that is not a good sign here, and this is going to be a second X on pillar number 2. Pillar number 3, we're looking for 5-year revenue growth. While their revenues were increasing until 2020, they've declined year over year from 2020 until 2021, and that's actually down from where they were in 2017. In 2017, they had $290 million of revenue, and that has decreased. In 2021, they had $272 million of revenue. So this is going to be our third X in a row here on pillar number 3. Pillar number 4, we're looking for 5-year net income growth. They've had negative income annually for all 5 years. And actually, the loss that they produced has increased over this time frame. They lost $106 million in 2017, and that has increased to a loss of $133 million through their earnings in 2021. This is another X here on pillar number 4, and we're starting off rough, 0 for 4 through 4 pillars. Next up, pillar number 5, we're looking for decreasing shares outstanding. So when you purchase a share of stock, what you're really buying is a fractional ownership percentage in that underlying business. When a business decreases the amount of shares that they have outstanding by buying back stock, they're increasing your ownership percentage in the business, which increases the percentage of the business's profits that you're going to be entitled to without you having to spend a dime. So we were actually seeing that from 2017 to 2020. During that time frame, International Seaways was buying back a little bit of stock. However, year over year from 2020 to 2021, they significantly increased the amount of shares that they had outstanding. And over this time frame, they've diluted existing shareholders by about 31%. So this stock dilution would be something to look into further, whether they issued these shares because they needed to raise capital, which could be the case, or because they were trying to make some sort of acquisition. If you're interested in International Seaways, you definitely want to understand this in more detail. Unfortunately, our 5th X in a row here on pillar number 5. Hopefully things can get better when we look at their free cash flows. Pillar number 6, we're looking for 5-year free cash flow growth. So free cash flow is cash from operations minus capital expenditures. It's this column here in green. Free cash flow is the lifeblood of any business, and a business's abilities to produce free cash flows, discounted back by some reasonable interest rate, is ultimately what that business is going to be valued at. So a business can use their free cash flows to pay dividends, buy back shares, pay down debt, make acquisitions, or reinvest back into the business. International Seaways' free cash flow profile is not looking too hot. They consumed more than $150 million of cash in 2017, 2018, and 2021, and they only produced positive free cash flows in 2019 and 2020. Their cash consumption has stayed about the same from 2017 to 2021, and it's pretty negative in both years. What's even more concerning is that their cash from operations were negative in 2021. Because they're producing a loss here, this is going to be another X on pillar number 6. And averaged out over this time frame, International Seaways is consuming about $52 million of cash flow each year. So unless they're able to turn this around and start producing positive free cash flows again, this is not boding well for the company. This goes again to highlight how cyclical the industry can be and how it can be impacted by some of these macro events in ways that other industries aren't necessarily. To have a swing to go from producing over $165 million of free cash flow to consuming almost that same amount in the next year is pretty drastic for a company of this size. Then pillar number 7, we want their net debt, which is long and short-term liabilities minus cash and short-term cash equivalents, to be below their average 5-year free cash flow multiplied by 5. Because they're not producing positive free cash flows over this time frame, this is going to be an X on pillar number 7. In order to start paying off this debt, they've either got to right the ship and start producing positive free cash flows, or they're going to have to raise capital through the financial markets, or they're going to have to sell off assets. One of those 3 things. So this company is in a dicey spot going forward. Finally, the big pillar of them all, pillar number 8, we want their market cap to be below their average 5-year free cash flow multiplied by 20 to give us a reasonable starting point for evaluation of the business. So currently they have a $1.4 billion market cap. Again, they're not producing positive free cash flows, so this is going to be an X here on pillar number 8 as well. So you might ask, if they're not producing positive free cash flow, then why do they have such a large market cap for a business that looks like it's very cyclical and trending down? The answer to that lies in their book value per share. So currently their stock price is trading at $28.48 per share, and at the end of last year they had a tangible book value of $23.58 per share. That's down quite significantly from these other years. However, over the last 12 months, year to date, they've actually increased this book value by another $1.16 per share. So while the company is trading pretty close to its tangible book, their current stock price is giving them some leeway into being able to produce future free cash flows. So currently, a rebound in their business is being priced into their stock based on their book value and based on their stock price. Then here we're taking a look at their dividend profile. So International Seaways has actually paid out dividends in each of the last 2 years. They also paid out a special dividend in 2021. This was really because of their comparatively massive free cash flows in 2020. In all honesty, with such a high free cash flow loss in 2021, they should not have been paying out these dividends. This is not a prudent capital allocation move, unless management is trying to shrink the business and return capital to shareholders going forward. Given the fact that they earn very low returns on capital, it likely would have been more prudent for them to pay off some of their debts and help shore up their business in other ways. So in summary, International Seaways Inc. checks the box on 0 out of 8 pillars. So a dog stock if there ever was one. The business has negative free cash flows. They've diluted shareholders by 31% over this time frame. They're only averaging returns on capital of 1%, and they have not grown their 5-year revenues, net incomes, or free cash flows. In addition to this, they have quite a bit of leverage in their business, and their stock price is trading above their tangible book value. So with their recent run-up in their stock price, there's some optimism priced into their business right now. And then we looked at the fact that they were paying out dividends in more recent times, trying to either attract attention to the business from investors or return capital to shareholders and pare down the business overall. So this type of analysis is a fundamental beginning understanding of International Seaways as a business based on their financials. It is not financial advice, and it is not a buy or sell recommendation of International Seaways. Instead, it serves as a starting point for you to determine whether it's worth your while to go out and learn more about International Seaways. You can do that by diving into their 10K and reading through their quarterly earnings reports to get a better sense of the business overall. Before making any investment decision, you should consult with the proper financial professionals and do your own research on top of that. So with that said, that's it for today's fundamental stock analysis of International Seaways Inc., ticker symbol INSW. If you enjoyed the video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what business you want me to take a look at next. Thanks for learning about International Seaways with me, and have a great day.